What's going on? Thank you for taking the time out to watch this video. Today we're doing a topic on CBDCs and MCBDCs, part 2. Let's not waste any time and dive right into it. We'll watch a couple videos and then we'll talk about them. All right, so I'm going to play the first video right now.
In 1694, the Bank of England became the first public bank to regularly issue banknotes as an alternative to coins as a means of payment. 3 centuries later, it's primarily tasked with maintaining price stability, much like any other central bank across the world. But these cautious institutions are now buzzing with talk of a revolutionary concept, a form of money you cannot see: central bank digital currencies.
When you ask central banks around the world whether they are exploring CBDC, 1 year ago the answer was 80% of them were exploring, and now it's nearly 90%. Last year, 40% were experimenting, and now it's 60%. The vast majority of central banks are exploring CBDC.
The idea of digital money is not new. Many of us use debit and credit cards or payment apps for transactions. But what would make a central bank digital currency different? One of the big financial developments over the last few years has been the rise in popularity of cryptocurrencies, with one in particular, Bitcoin, standing out. Following Tesla's announcement that it bought $1.5 billion worth of Bitcoin in February 2021, the volatile cryptocurrency's price surged to new highs, giving it a theoretical market capitalization that is even larger than the world's 2 largest payments processing companies, Visa and MasterCard. Unlike traditional money, cryptocurrencies are not issued by a central bank, but rather via a decentralized network of computers, typically using blockchain technology. Even Facebook is trying to get in on the act, with the 2019 announcement that it would develop its own digital currency, known at the time as Libra, and now rebadged as Diem.
And so at that point, central bankers started to realize that they were really under some threat. And the question became, if we can't beat them, do we join them?
Investors in Bitcoin believe that because there is a theoretical cap on the number of Bitcoins that can ever be mined, the cryptocurrency will become increasingly valuable at a time when central banks have been printing more money than ever before to arrest the economic fallout from the pandemic. That's why people sometimes call Bitcoin digital gold. Many central banks are worried that the widespread adoption of these independent cryptocurrencies could weaken their control over the financial system. This could cause financial instability, especially because cryptocurrencies do not have the legal or the regulatory safeguards that central bank money does. So why not issue a digital currency of their own? Currently, regular bank deposits, cash, and cryptocurrencies issued by the private sector, such as Diem and Bitcoin, all have a few features that make them useful. But the hope is that publicly available CBDCs would have all these desirable characteristics. Unlike your savings in a commercial bank, which rely on the bank's promise to fulfill, CBDCs are recognized by law and backed by the power of the central bank, which cannot go bankrupt. For example, if a commercial bank collapses, part of your savings could potentially be wiped out. But this wouldn't be the case for CBDCs, which could be as trusted as cash, as convenient as a payment app, yet also benefit from the same blockchain technology which underpins cryptocurrencies. And, just like cash, CBDCs could be distributed through commercial banks, avoiding too much disruption to the financial system, or the central bank having to deal directly with many millions of citizens and businesses.
Think of banknotes, which are the closest equivalent to central bank digital currencies that we have today, except that they're on paper, of course. This is money that is issued by the central bank and used daily in retail payments. So the central bank sells banknotes to commercial banks, and then the commercial banks distribute banknotes through ATMs to their clients.
This means that everyone could have access to this digital currency, which could bring a lot of benefits. It could make payments faster, allowing for immediate settlements and no processing delays, and it could also make payments cheaper. In the US, the aggregate cost of making retail payments ranges from 0.5% to 0.9% of GDP. Digital, more people could have access to electronic payments. Currently, over 1.5 billion adults across the globe don't have access to the financial system, and even in an advanced economy such as the US, more than 6% of Americans don't have a bank account. Issuing digital currencies could also make it easier for governments to deliver stimulus checks, or even go one step further and make targeted payments to those deemed most in need. So how soon could central bank digital currencies become a reality? China is the major economy which is most advanced in its CBDC development. The People's Bank of China has been running tests of its digital currencies since April 2020 with the help of 4 banks in the country. Tens of thousands of consumers have already been involved with the pilot, spending 2 billion yuan in over 4 million transactions. For China, it could also be a means of reasserting control over a financial system challenged by the rapid growth of fintech companies.
AntPay and WeChat, I mean, these are the dominant payment technologies in China, and they are in the hands of Alibaba and Tencent. And if Beijing can wrest that back, then I think they will. And the way that they've set up the e-yuan is that it will still be effectively very integrated with the commercial banks, but it is effectively a direct challenge to the payment technologies. They are trying to ultimately displace them. The e-yuan is going to have its own digital wallet.
Right.
At the commercial bank, and over time people will probably just find it more convenient to use that, and thereby displacing AntPay, for example.
There may also be a geopolitical consideration for China, providing a mechanism to shift away from using the US dollar.
There's no doubt that Beijing views the US dollar as a strategic advantage that the US has. The problem is that most of the trade, the real world trade, is denominated and invoiced in US dollars, right? And China sees this, and it's very hard for them to sort of push renminbi into the global financial system, the global trading system, but they're trying. But if they had a digital currency, that would be potentially a really fascinating angle. So you can see, if it's got a technological advantage, that perhaps this is a way for people to think about the renminbi in a different way, and perhaps, you know, ultimately start to chip away at the hegemonic status of the dollar.
But it's not just China. The European Central Bank has plans for a digital euro, although it may be a few years before it is available.
We are going to have to address all the issues of anti-money laundering, financing of terrorism, privacy of users and all the information, the appropriate technology that will carry that digital currency. And this is, you know, a project that will probably take us 2, 3, 4 years before it is launched.
This has got people wondering whether issuing a central bank digital currency could interfere with the effectiveness of monetary policy.
Central banks have addressed CBDC so far is really as part of a payment discussion. That's a discussion for monetary policy committees, for the ECB Governing Council, whether they want to use CBDC or not. But it's too early to have that discussion.
But theoretically, if the central bank wanted, they could also pass on negative rates to the holders of central bank digital currencies.
Think of CBDC as being the future of banknotes. Banknotes do not bear interest. And so if you follow that line of reasoning, then CBDC should not bear interest. And if you want CBDC to bear interest, then you're creating something different.
A lot depends on how much people would use CBDCs, and no central bank wants them to completely replace traditional cash, but rather to complement it. One risk associated with CBDCs is that in an extreme situation, such as after a financial crash, you could see people withdrawing their deposits from commercial banks and opting to store their money in digital currencies backed by the central bank.
Trouble would be if CBDC would replace bank deposit in a large amount, because then what happens is that savers could shift their saving from bank account to CBDC. Then banks could have a problem for funding. This might have an effect on the financing of the whole economy. People can shift their saving from bank account to CBDC just with a click, and this would be very dangerous, obviously.
As we move towards a more cashless society, will central bank digital currencies ever become as trusted and as convenient as banknotes? Quite possibly, though it may take months, maybe even years.
The trust in private money is built on the trust on the currency and the fact that behind that there is a central bank which has tools to keep the value of the currency. We have to buy this trust, and that's why we need to stay into the economy. And the way to stay into the economy is to make sure that people trust us.
So that's a video that was about a couple months old, and it's basically from CNBC talking about central bank digital currencies. So they're basically preparing you for what is to come. Now, it's your decision. This is not financial advice, but do you want to participate in that system? Or do you want to participate in your own system, becoming your own bank using Bitcoin and other cryptocurrencies? So let's see what the talking heads over at the BIS have to say about it, the ones that are actually directing all of the central banking system on creating this new currency, and also what CBDCs mean. So I'll play this video and then we'll talk about that.
Hello everyone, I'm Benedict Nolens, the head of the Hong Kong Center of the BIS Innovation Hub. I hope you're very much enjoying the first day of our inaugural summit, with 2 more interesting days to follow. Please allow me to steal a few minutes of your time to introduce to you the work program of the BIS Innovation Hub. As you may be aware, the BIS-IH focuses on applied technology research and prototype development across 6 strategic teams: Subtech and RegTech, Next Generation FMIs, CBDC, Open Finance, Cybersecurity, and Green Finance. Within the Hong Kong Center, we are focused on MCBDC Bridge, Retail CBDC, Digitising Trade Finance, and Tokenization of Green Bonds. In the next few days, you will also hear about the project focus areas of the Swiss Center and of the Singapore Center. However, in this material, I will focus on the 4 projects of the Hong Kong Center. So first of all, we are working on a multiple MCBDC bridge. This project builds on the experience of Intanon Lion Rock, a project first initiated by the Hong Kong Monetary Authority and the Bank of Thailand. It studies the adoption of distributed ledger technology to facilitate real-time cross-border fund transfers and atomic PVP for FX transactions. We recently welcomed the Central Bank of China and of the UAE to this project. The second project we're working on in the Hong Kong Center is Retail CBDC. This project is an applied technology research project that studies the benefits and challenges of tiered architectures for the distribution of retail CBDC through commercial banks and payment service providers. This project will investigate 2 architectural models: hybrid CBDC and private CBDC-backed stablecoins. The third project of the Hong Kong Center is focused on tokenization of green bonds. It aims to produce a prototype for the introduction of tokenized green bonds in small denominations, thereby giving greater access to retail investors. The project will also integrate tracking and disclosure of green outputs for investors, thereby showcasing technologies that can be used to reduce greenwashing and to enhance transparency. The 4th project concentrates on digitizing trade finance. This project is a continuation of the tech challenge that we completed in 2020, and which called for trade tech solutions that facilitate connections between digital islands, trade finance inclusion for SMEs, and trade tech for emerging market economies. The tech challenge concluded in a series of winners that can be viewed in the showcase. In its current phase, the project deepens down as it continues to study the key pain points and by implication automation opportunities, including in regards to corporate digital identity, credit assessment, and APIs. Given the large role of the private sector in trade finance, we truly welcome continued industry engagement on this topic. We are, as you can tell from this slide, a small team. We very much look forward to working with you. Up next will be a video that showcases the MCBDC bridge in more detail. Thank you very much.
Interest in CBDCs has grown in response to changes in payments, finance, and technology, as well as the disruption caused by COVID-19. A 2021 Bank for International Settlements survey of central banks found that 86% are actively researching the potential for CBDCs, 60% are experimenting with the technology, and 14% are deploying pilot projects. In simple terms, a central bank digital currency, or CBDC, could be used by individuals to pay businesses, shops, or each other with a retail CBDC, or used between financial institutions to settle trades in financial markets as a wholesale CBDC. Central banks are exploring whether CBDCs could help them to achieve their public good objectives, such as safeguarding public trust in money, maintaining stability, and ensuring safe and resilient payment systems and infrastructure. If successful, CBDCs could ensure that as economies go digital, the general public would retain access to the safest form of money, a claim on a central bank. This could promote diversity in payment options, make cross-border payments faster and cheaper, increase financial inclusion, and possibly facilitate fiscal transfers in times of economic crisis, such as during a global pandemic. The Bank for International Settlements Innovation Hub intends to contribute to this area through applied technology research, proofs of concept, and prototypes with central banks around the world. One such project is the Multiple CBDC Bridge. The Multiple, or MCBDC Bridge, is a wholesale central bank digital currency co-creation project involving the BIS Innovation Hub, the Hong Kong Monetary Authority, the Bank of Thailand, the Digital Currency Institute of the People's Bank of China, and the Central Bank of the United Arab Emirates. The project, first initiated by the Hong Kong Monetary Authority and the Bank of Thailand under the name Inthan and Lion Rock, was renamed MCBDC Bridge upon the joining of the BIS Innovation Hub Center in Hong Kong, the Digital Currency Institute of the People's Bank of China, and the Central Bank of the United Arab Emirates, announced in February 2021. Its aim is to propose solutions and concepts to alleviate the current pain points in making cross-border fund transfers. These include inefficiencies, high costs, and complex requirements for regulatory compliance. Leveraging enterprise Ethereum blockchain technology, the MCBDC Bridge will further explore the capabilities of distributed ledger technologies by developing a POC prototype to support real-time, cross-border, foreign exchange payment versus payment transactions in multiple jurisdictions operating 24/7. It will analyze business use cases in a cross-border context with both domestic and foreign currencies. The participating central banks will take the results of the POC work into account to evaluate the feasibility of the MCBDC Bridge project for cross-border fund transfers, international trade settlement, and capital market transactions in their own jurisdictions. The MCBDC Bridge project fosters a conducive environment for more central banks in Asia, as well as other regions, to jointly study the potential for distributed ledger technology to enhance the financial infrastructure for cross-border payments. MCBDC Bridge is a multi-currency CBDC platform used by central and commercial banks to streamline key financial, economic, and regulatory activities. Using the platform, central banks can issue CBDCs, which commercial banks can use to perform cross-border payments and fund transfers instantly. Central and commercial banks can also trigger liquidity-saving mechanisms to relieve gridlock between network stakeholders, either within a single local jurisdiction or between different jurisdictions with different currencies. And thanks to MCBDC Bridge, central banks can automate key regulatory operations such as monitoring banks' wallets and transactions in real time, setting threshold limits for their currency, and reducing the balance of commercial banks with holdings above the limits. At the same time, commercial banks can provide automated reporting to comply with local regulations. The use of a decentralized network will guarantee that the platform is highly secure and available 24 hours a day, 7 days a week. This demo illustrates 4 key features of the MCBDC Bridge platform: the issuance of CBDCs by a central bank, the foreign exchange of 2 different CBDCs, the transfer of a CBDC between 2 commercial banks, and the redemption of CBDCs from a commercial bank at the central bank. To start, the Hong Kong Monetary Authority, a central bank, issues 1,000 Hong Kong dollars in CBDCs to a Hong Kong commercial bank, Bank A. Then, the Hong Kong Commercial Bank, Bank A, triggers the platform RFQ mechanism to exchange 500 Hong Kong dollars in CBDCs against 2,000 Thai baht in CBDCs with a Thai commercial bank. Finally, any bank can redeem the CBDCs with the central bank. CBDC Bridge has been designed to allow more central and commercial banks to be onboarded to the platform smoothly, and its design also makes it easy for new features and use cases to be built onto the system.
So guys, let me know what you think about this video in the comments. What they're leaving out and what they don't want you to know is you can become your own central bank. You can become your own banking institution. You can have control of your own funds, your own currency through Bitcoin, through cryptocurrencies like Litecoin, Divi, Digibyte, the AMP project, the Flexa network, all those different ways to become your own bank. And this is what they're not telling you. So they're selling it to people in a way where they're leaving out that they have full control over everything you do when they implement this system. And notice how they used COVID-19 as a way to implement it. So the next time we have a pandemic, they can lock everybody down and say you can only go out and spend so much. They'll have complete control over your assets, over all of your money, all of your funds. Do you want that? Is that something you look forward to? Leave comments down below. Maybe I'm wrong. Maybe you guys want that type of stuff. I know I don't. And that's why I'm looking for ways to get out of that system. All they're doing is taking the old system, putting in a new system by creating a problem and then giving you or selling you or promoting you their crappy solution that is no better than the old debt-based dying fiat system that we're already living in. That being said, guys, I'm going to go ahead and cut the broadcast or cut the show right there. Leave comments, like, share, subscribe. Go ahead and check out the Patreon channel. Check out Crypto Confidential. And I hope you guys have a great day.